conversation again. It's being said more and more as the economic growth is slowing down and high unemployment rates, at least by contemporary standards, are still ticking up, especially here in the state of California. But is stagflation putting a downward pressure on bank stocks? For that, I'll get the answer from this guy. Vice President of Wilsey Asset Management, Mr. Chase Wilsey. Chase, welcome back to the big show.
Good morning. Thanks for having me.
I think we should start with a definition of stagflation. It's been a while since it's been part of our day-to-day conversation.
Yeah, so this actually was first coined in 1965 by a British economist, and obviously the first time we saw it here in the U.S. was back in the 70s, 80s. And what stagflation is, it's essentially an environment where you have high inflation, high unemployment, and low economic growth. Definitely not a situation you want to be in.
All right, I would push back against the lead in there saying, is 4.4 unemployment considered? There was a time when 4.4 unemployment was considered full employment.
Well, and that's kind of what I look at is I don't believe we're heading towards a stagflationary environment. And a big reason you look at it, and even Jerome Powell, the head of the Fed, came out and said, I wouldn't say this is stagflation. I reserve that term for the 70s and 80s. You have to remember, back in the 70s and 80s, well, inflation hit around 12%. Unemployment hit almost 15%. I mean, we were in these very dire situations. Right now, unemployment, I said 4.4%. CPI most recently, 2.4%. We have a long way to go until we really hit situations that I'd say be concerning from an economic standpoint.
And let's go into the inflation numbers. I mean, those aren't anywhere near what they were in the 70s and 80s.
Nowhere near them. And the big thing I look at is we will see an uptick in inflation. I'm not going to sit here and say we won't. Obviously, oil prices, energy prices are going up. So I wouldn't be surprised to see headline CPI, probably not in the month of March, but maybe in the month of April, maybe be in the 4s. And also, too, you have to look at core, though. That's going to exclude food and energy. And energy, it does have a long-term impact on inflation because it does start to bleed through in transportation costs and production costs, things of that nature. But if oil prices come back down, and I do believe they will not sit at 100 for the rest of the year, I don't think you'll see companies need to increase prices and it actually infect core inflation. So you got to keep an eye on both headline and core inflation as well.
So I believe the president is giving an address today. We don't know what the topic is, but let's say it's something encouraging, like, hey, we have 3 more weeks in Iran and then we're done. We're pulling everybody home, bringing everyone home. How quickly does a decision like that start reflecting in the, because we had a 1,000-point day on the Dow yesterday. We're up 250, almost at one point 300 points this morning. Will it respond quickly?
I do believe it'll respond quickly, and the thing that you look at as a stock market is forward-looking. Now, that doesn't mean it is always 100% accurate when it comes to those forward expectations. That's why I always look at the stock market short-term as it's gambling. I mean, I can't tell you what Trump is going to come out and say tonight, and also, too, you don't even have to guess what he's going to say. You're going to have to guess how the market's going to react to what he says.
And yeah, you have to guess of how accurate what he's going to say, and he can be saying what his vision of the truth is.
And that's why we always tell people you have to take a long-term view when you're investing, because short-term, it's just Benjamin Graham, who's Warren Buffett's teacher back in the day for value investing, said short-term it's a voting machine. It goes bing, 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 bing all over the place. But long-term, it's a weighing machine where strong companies with good fundamentals will weigh out and be a positive for you as an investor.
But I think everyone, not everyone's in the market, but everyone has, a lot of people, working people have 401ks, and which is affected by the market number. And the better that 401k, the bigger it is, even though it's a paper number, they feel better about their life, and when they answer questions about how they feel the economy is doing, they tend to be more positive. So there's a value in the stock market for everyone being up, is there not?
There absolutely is. I mean, it does impact so many different people, and even pensions. I mean, that's something that you don't directly see the volatility in your 401k, but you need those pensions to do well so they continue to pay out your pension income in retirement. So even if you aren't invested in a 401k and you are a benefactor of a pension, well, we need a strong stock market to have a strong economy.
Are we going to see a number above 50,000 before this year is over again? Is there a lot of money on the side right now?
I do believe it's very likely we see a number above 50,000 again. I do think there is a lot of, I'm going to say, pent-up demand. There is a little bit of anxiousness when it does come to valuations, and that is something I am concerned about. But I do believe that'll have less of an impact on the Dow, more of the impact on the NASDAQ and S&P 500, as those are more geared towards the tech names. I'm looking for more of a rebound in bank stocks, more of a rebound in industrial stocks, companies of that nature, rather than kind of a return to tech as the favorite sector.
Chase, I kept you longer than I was supposed to. Thanks for rolling in.
Of course, thanks for having me.
Chase Wilsey, everybody. Oceanside.